So I want to start this panel off. I mean, this is about payments and the digital wallet. All of you are sort of contributing to that in some way. This is my wallet. Like, it puts George Costanza's wallet to shame. It's huge. And I don't feel like I can really make my wallet any smaller or switch over to a mobile phone. And I feel like maybe not Gumroad, but all of these other companies on the stage do promote this idea of the digital wallet, having one wallet either on your mobile phone or in the digital world somewhere. It feels like a fallacy. What do you guys think?
I think it's probably 5 years before we're going to be walking around with no real physical wallets, so I'd say it's a little ways out there. But consumers aren't saying, boy, I really want a digital wallet, somebody give me a digital wallet, right? They're looking for ways to shop securely. They're looking for ways to manage the complexity of their daily lives with, the average consumer has 5 different cards in their wallet. They've got membership cards, loyalty cards, forms of identification. And so companies that can simplify that for them along the way are going to be successful in getting traction there.
But I feel like PayPal's actually been saying that you can use your PayPal account to really pay for anything,
right.
Whether that be online goods, offline goods.
Right. So, 14 years ago, PayPal essentially invented the digital wallet without really intending to, right? So building out a cloud-based infrastructure that can store multiple funding sources or payment methods to a consumer's identity is exactly what PayPal, did when they first started. And so while we're still sort of working towards making that more functional, right? Making people, give people the ability to store things like loyalty cards, like other forms of alternative payment in the wallet, increases the flexibility of using that. And that's all well and good online, but when you go offline, you need to find new problems to solve, because most people wouldn't say carrying a wallet is a huge problem for them. Everyone would like to leave it at home because...
Well, it's a problem for me,
yeah.
So do it for me. No,
yeah.
John, I'd love to hear your perspective on this, because, at Stripe, do you guys view Stripe being that one login that you can use across your online identity?
I think people have long been kind of confused as to what a digital wallet means. In that sense, in one sense, we've solved this problem already. I sign up for any app, I add my payment credentials, and then those stick with me the entire way. And I think what a lot of people mean when they say digital wallet is this one company that acts as the single point of control for both buyers and sellers. And I think, one, that's pretty rare and unstable, and two, it's not very healthy. And all the problems we've seen with, say, things like the App Store stem from the fact that you have this single controlling entity. And I think, obviously, it's an attractive proposition for companies to be the only way to accept payments, but I don't think that's healthy, and I don't think it's likely to be how it plays out. I think within apps, what we'll likely see is multiple ways to pay, and we see this already. And so what we're focusing on with Stripe is the acceptance piece, making it so that it's very, very easy for people developing mobile things to start building a paid mobile product. That traditionally has been very, very hard. You were like working with the merchant account system, which doesn't really understand mobile. And so we give people an iOS SDK and just say, go make things with that.
So you're saying there'll be multiple ways to pay?
I think that's
online.
That's always how it seems to. If you look at the physical world as an analogy, you don't have one controlling entity. You have a number of credit card companies, and you can pay with any of them at any store, and that's kind of a more stable equilibrium. I think it would be very unusual and not good for consumers if you had one company that clamped down on how you pay for virtual things.
Sahil, do you agree?
Yeah, I think whatever will win will be what's best for the consumer, and I think every consumer has like the things that they use. Like even, I'm one guy, I have more than one way to pay. I think the thing about the digital wallet that a lot of people don't, things work, things take over, and when there's like no regressions, when it's better in multiple ways or better in some way and it's not worse in other ways. Because typically you'll have some technology that's better in a bunch of ways, but it makes something worse.
Could you give me an example of that?
Yeah, like the Kindle is a great example. I think the Kindle is better than like a traditional book in a lot of ways, but it runs out of battery, right? And it's not as high fidelity as a book, so like it still takes them a lot more time, and it has to be in the things that it's better at, it's way better at
Right.
for people to switch. And I think that the thing with payments, with cash, is the regression is like the fee, right? Like people are always going to carry around cash because it's free. You know, I give you $5, you get $5, and that's an experience that doesn't really happen with credit cards. It doesn't happen with almost anything else.
The one thing people always bring up with digital wallets is a better way to, everyone is left tapping in credit card numbers right now, and I think it's pretty obvious that that's not how things will go long term. You'll have a better way of giving your identity to an application, which is fundamentally what you're doing when you swipe a card or when you like input your credit card number. You're saying, this is my payment identity, this is who I am, you can now charge me. It's pretty obvious that both swiping cards and entering in your card number will go away, but I think that's a little bit different for most people, you know, for most companies' vision of like the digital wallet, which we control and make a bunch of money off.
PayPal's trying to do that. You
Yeah.
guys just announced something today about that.
Yeah, so just before I get into that, I wanted
Yeah.
to touch on a point there that I think it's a good one John makes, is that people, they want to buy things, right? They don't want to have a complex way to pay. And so, you know, being able to share your identity with a merchant to be charged is very different than sharing your credit card number or your bank account information, right? And so PayPal's whole foundation is around giving consumers the ability to assign permission to someone to charge their account, and that person who charges the account doesn't know where the money comes from or what the numbers associated with that account is. So there's a fundamental layer of security there that people know and trust, and that's why they use PayPal. Today we announced a new feature for developers called Login with PayPal, which is essentially a tool for developers to get more converting consumers to use their apps, particularly on mobile. So it solves the pain associated with creating an account, much like Facebook Connect would, right, creating an account, but it also lets you check out easier with a payment credential. So it's essentially giving consumers a way to access a mobile wallet or digital wallet, right, without, it's not, you know, it's not called a digital wallet. You're not actually like thinking that's what you're doing. You're just logging in with PayPal to create an account and to use your PayPal payment methods on file to be charged whenever you want to make a payment with that provider who integrated that service.
Now, from the retailer standpoint, would they still have control over some of the data that's, you know, the transaction data? They use that, you know, the browsing data, all the sort of things that are attached to your login. Would they have access to that data?
No, the consumer completely controls that, so they have to permission, you know, each merchant what they can use. Can you use my email address for creating an account? Can you use my payment credential to charge me? So the user is in control of that. Once they do give permission, though, the merchant can pull that information to facilitate account registration and payments.
So it seems like there's a new launch, like a payments launch every day, every week. I mean, we cover this on TechCrunch. I feel like we're at danger of overwhelming the consumer with so many different options that, you know, they just give up on digital payments technology or even mobile payments technology. What's your perspective on that, and how do you deal with that, you know, when you're structuring your product? Sahil, can you weigh in on that?
Yeah, so I think there are definitely a lot of like payments. It's like we're at like peak payments or something, right? Like there's a lot of stuff happening. People are really interested in it, but I think it rarely actually hits the consumer in any way. Like I talk to friends of mine that are normal people that, you know, don't know what TechCrunch is or what have you, and they, you know, you ask them, how do you pay for stuff? And they're like, I don't know, I use my credit card, I pay with cash. Like they don't really think about, like they don't really care really about anything else. They just want to buy their, like a chocolate bar at 7-Eleven. And I think getting that kind of proliferation, like getting people to know about you is so challenging that, you know, 100 payments companies could launch every day, and my friends won't feel like they're getting bombarded because they would have never made it that far. I also, the other thing I think is it's rarely the payment that's very interesting, right? Like most interesting things use some sort of infrastructure, you know, typical one, I guess, the card brands, right? Visa, MasterCard, Amex, et cetera, and do something interesting with it. And I think that's like the really cool part, because the payment is pretty atomic. You know, you charge some amount to some account, and at some point the merchant gets it. But I think there's things that you can do, like you can tie identity with the payment, so you can like mitigate risk, or like what Affirm is doing. So you can say, hey, like you get the thing now, but we'll actually collect your information later on to get rid of friction. And I think those are the really cool kind of innovations or whatever happening in payments are not the actual payment itself, but like, hey, we have the payment, we also have these other things that we weren't able to get before as part of the same kind of step. What can we do with that? What does that allow us to do? What kind of experience can we give the consumer that they haven't been able to have before, et cetera?
John?
We actually have pretty strong feelings about consumer experience at Stripe, and our feelings are that whoever, the app or the website or the merchant, should control and direct as much of that experience as possible. And one of the things we're trying to avoid is getting in the way of that. I think PayPal's strategy, part of it is predicated on creating this distance between the consumer and the merchant, PayPal acting as an intermediary. This implied message of, it's more secure because the merchant doesn't get your payment credentials. You shouldn't trust this merchant with your payment credentials. There's a little bit of distancing going on there, and you go over to this separate app to pay or whatever. We really feel that the best experience is one where the app developer, say, has complete control over how it flows. So we work with a lot of apps that are just doing new kind of things, new kind of payment experiences. We work with a lot of the ride-sharing apps like Lyft and Sidecar, and there, it's not like you're paying for the app each time. You input your credentials once within the app sign-up flow, and then it's just billed without your phone without you even taking your phone out of your pocket every time after that. And that's something that, we can't say what's best for them to design. It's about giving them the building blocks and letting them completely own. It's their receipts, it's their, it's within the app you're signing up, letting them own the payment experience.
You want to respond to that?
I mean, there are a lot of different things I'd say. I'd say the first is you just have to solve somebody's problem, right? And so often we get lost in what we can do with technology that's cool or different and innovative, and we lose sight of what problems people really wrestle with. And so for developers, the big problem is just really simple, right? How do I get paid for my service that I just built? And so we recently relaunched mobile libraries that plug into iOS or Android apps soon, where developers can charge their customers with a credit card, and we improve that by layering on some scanning technology that we acquired from a company called Card.io, which allows consumers just to hold their credit card under the camera's phone, and it pulls the data from that to help facilitate a checkout on just a card. But with that same simple integration, you also get PayPal as a payment type. So you're giving your customers who want to use PayPal, 128 million consumers around the world want to use it when it's offered. So as a developer, you're getting the same simple integration, but more choice for your customers, and also an easier card checkout experience. But you have to just stay really focused on that consumer problem. And I think we're all in sort of slightly different spaces, and merchants have different problems in each of those verticals. Consumers have different problems to wrestle with. So it's just about applying that and making it simple.
John, you mentioned that you allow the developer, the merchant, to kind of create their own experience around your simple payments product. I see how that works for technology companies, but what about the retailers, the big retailers who aren't known as the most technologically advanced or innovative companies out there? How do they respond? Are they able to really take what you have and go with it?
You're still talking about online?
Online.
I don't think any online retailer says, oh, we want to offload the checkout experience to someone else, right? They also care a huge amount about the checkout experience. And in fact, being able to craft something really different, I mean, it matters more for them than for smaller people sometimes. And so we see larger folks as well. We recently started working with Walmart Labs on their new subscription project, Goodies, and they wanted to use Stripe for that because, again, they wanted people to be able to sign up for this subscription product and then get billed in the background, so they get a box of food every month through Goodies. And they, that's how they built that.
I want to talk about credit card companies because they're not represented on this panel, but they very much are part of the digital payments and mobile payments structure. And all of you on the panel probably deal with credit card companies. MasterCard said earlier this year that it plans a new fee for digital wallet operators like PayPal in June, and Visa said they may do the same. Hill, I'd love to get your response on that fee. And then I also want to hear if do you see credit card companies as frenemies, foes, enemies, friends?
Yeah. I mean, certainly in PayPal's case, that's probably accurate, frenemies, right? I mean, I think we're one of the largest customer to the associations. And so in that regard, we're really good partners. We do a lot of volume through their networks, and that's all a good part of the business. And then in other cases, they're creating digital wallets too. Like Visa has this wallet, MasterCard's working on something as well. So there are areas where we are competitive, but the bulk of our relationship is partnership based.
What do you think about that fee, Hill?
What do I think about the fee?
Yeah.
I don't know. I mean, it's something where associations for a long time have used fees and pricing to try to tilt the market one way or the other. For us, it's we've talked about in our earnings calls and stuff. It's it's a relatively trivial bit to our story. So much of our business is relying on other forms of payment. We have our own credit. We have ACH-based payments. So MasterCard is a sliver of our funding sources, and it varies by country too. So in some countries we go into, people aren't even using credit cards to fund their PayPal account. So on the whole, we have a very diversified portfolio of sources of funds, and so it's a sliver of that.
Sahil, what do you think about credit card companies and how to work with them?
Yeah, I mean, we work with credit card companies, kind of the big four plus. I think, in general, I don't think that there are many issues in the ways that that it works. Like, it's super easy. Like, the thing that a lot of people, when they think about alternative payments and things like that, they forget about is the credit part of the credit card. Like, that's really important to a lot of people, and you can't really. A lot of people are like, oh, we're going to kill the credit card, and I'm like, you can make it easy to pay. You can have a digital wallet. You can have all these things, but the credit part of the fact that I can pay for things without having actually had paid for them, literally yet. Is a huge chunk of why people use credit cards, and why people care about credit reports and credit history and all that stuff. I think that they can do a better job with certain things, mainly about the way that they deal with risk and things like that. I think cards aren't super secure. They haven't really changed in a while. I think like chip and pin system in the UK and stuff like that is kind of the way that I got a new card from Bank of America. They have that software in there, or hardware. So I think they're moving. I just think that I would like them to move faster. But yeah, frenemies, same thing.
John, can you weigh in on how you feel that credit cards are going to be competitive to you?
I mean, Stripe fundamentally is about accepting payments online, and credit cards are this instrument that everyone has. And yeah, everyone likes to, because credit card companies are so big, it's very easy to poke holes to them, and I have holes to poke with them. But
what are the holes?
I'll tell you in a second. but fundamentally, they provide a very valuable service, which is people in all these countries all over the world being able to pay for things remotely. Like, that's a very valuable thing, and they are doing a lot of the legwork in linking up, creating the economic linkages between people. That said, they do move reasonably slowly, and that's frustrating for people in our position. Also, coming back to the fee, I think their whole system of having these very large, very complex and opaque fee schedules is part of what created an opportunity for Stripe, in that credit card companies like to use fees as a way to kind of eke out more revenue in different bits and places, which makes it very difficult for merchants to manage their business. So one of the things Stripe did was we said, we're not going to tack on a bunch of hidden fees and charge different things for different cards. We're just going to say, no cost to start using Stripe, one flat transaction fee, 2.9% plus 30 cents on successful transactions, and that's it. And we're going to be kind of honest with you on what Stripe costs. And that was a big opportunity for Stripe, but you kind of think it shouldn't have been, right? You kind of think that this should have been fixed a long time ago.
Did you?
I think merchants care about fees, right? It's their money, right? And they want to keep as much as they can, but I'd say they also care more, or as much, if not more, about growing their business and getting new customers. And so at PayPal, yes, we have products that help you accept credit cards, but we also have our customer base of 128 million that if you offer it as a merchant, you're going to see your conversion raise on average 19%, right? Because now you're exposing your service to a wider audience that is more likely to buy from you. So Fees matter, but new business, new customers matters more, I'd say.
How do you balance keeping, your merchants happy, the developers happy who are using your product, versus also having an easy-to-use consumer-facing product as well? Seems like that's a balance that, payments companies in general, or anyone that has a consumer-facing product has to really find, and no one has yet been able to solve it fully because we don't have one person who's dominating, just altogether. Could you weigh in, one of you weigh in on that?
I mean, the way you do it is you let the developer decide on what I know this is the same point as earlier, but you let the developer decide on what the payment experience should look like. For like a very business-focused company, it's going to look different from a lightweight virtual goods company. Gumroad is awesome. Gumroad are one of the companies using Stripe, and they have this absolutely gorgeous short checkout form because it's for a virtual good. It's it's going to be a fairly quick purchase by the consumer. They want to get this thing and start using it. If you are instead selling someone a $5,000 piece of hardware, that's going to be a different purchase experience, and it should. And so having the same purchase experience across both doesn't really make much sense.
Yeah, I would agree with that. I was with Zong, right, which was acquired by PayPal 20 months ago, and our focus was digital goods as well. And so we built a network for mobile payments to allow people to charge their purchase under their carrier bill, and the whole experience was in context. It was very simple. You just typed in your cell phone number and you confirm the transaction. It's very easy. This year we'll do $7 billion on PayPal for digital goods by having a tailored experience for that.
Could you explain to me?
I mean, the categories I would say would be, the number one would be app stores, so just mobile apps, digital apps, video content, audio, games are really big, so virtual currency, digital goods, things like that. But that's a very specific use case that requires a very frictionless flow. So you need something that's very lightweight, very minimal. In other cases, like our core PayPal checkout, where consumers are checking out because they want to choose where their money comes from, and they want to, sign into their PayPal account and say, oh, I want to put this on my Bill Me Later credit line, or I want to charge my Amex, or what have you. It requires a little bit more interaction there, so the experience naturally needs to be a little different. So it just depends on what the merchant use case would be.
What do you think about that, Sahil?
Yeah, so I agree with both these guys. I think it depends, right? Like consumers expect and conversions change depending on what they're getting. Like if you're paying for a large amount for something that's really valuable to you, you're going to go through more steps. Conversion might actually increase the more steps there because it implies security and things like that. The way we tackled it, because we have kind of one payment form, is we went very like kind of deep and narrow. Like we were like, we're gonna help artists, designers, writers, people that make digital content for a big audience. We're gonna help them, and we built a form that worked really well. If you wanted to sell an album, wanted to sell a track, wanted to sell a comic book, etc. And it's cool because we're working on new things along this front, but even with that kind of narrow focus, you see differences. You see like different products. People expect different things because of what they're used to, where they're coming from. Whether they came from Twitter, Facebook, or a website, how much context was provided before they got to your page, and so we've started kind of dynamically incorporating some of that into like potentially changing our payment form kind of automatically. The thing you said about like kind of balancing what an experience that consumers are going to like and merchants are going to like too. I think in general, the better experience you have, the more people are going to end up completing the form, the more money is going to go into the pockets of the merchants. So I think there's less of a battle there. It's not kind of like advertisers and users where there is like a much more like they're kind of at odds, where I feel like there are a lot more parallels. You remove a step, conversions go up, merchants make more money, no one really complains. That makes my life a little easier.
So the last question before we break for lunch, but there's been a talk a lot here at the conference and then just in general about Bitcoin and its value as a new currency. I'm curious what your perspective is, just considering that you're all in the payment space and Bitcoin could be something that you accept in the future. What are your thoughts on, is it going to be something that you will accept?
Bitcoin's still pretty small in the scheme of things right now, but I think the The interesting thing about it is access. No one needs to enable Bitcoin for South Africa or Pakistan, or it's everywhere already. It's like cash. No one can prevent you from having it. And so as we think about new ways to help people accept payments, there is that desirable aspect of Bitcoin where it's worldwide from day one, and it's very easy for people to start spending from day one.
What do you
I would just
think?
agree. I mean, its properties are pretty mind-blowing, right? It's like the perfect currency by design, which is very interesting to look at and study. I think, I'm curious to see how governments respond to it and how regulation may impact consumers' ability to get money in and out of those systems. It's still very early, so by and large, it's pretty easy to do that. But I think it's a fascinating phenomenon, and we're definitely watching it.
Yeah, I mean, Bitcoin's been around for like 4 or 5 years now. I think it's always been interesting. I still think it's really early. None of my friends know what Bitcoin is. I think you can use a name change. Bitcoin is kind of, I don't know, sounds really techy. But I think it's interesting. I think a lot of the things that, like, the ideas that it contains are really interesting, and I think will kind of affect the way other people think about building stuff. That might come off of it. As of yet, I don't think it's big enough for anyone to really for it to have any real impact on things.
The last thing to remember
Yeah.
is we think of Bitcoin as having been around for a while, but actually if you look at the development of any kind of, even online technologies, which can be quite fast growing, the web has been around since around 93, and it took, through the rest of that decade and into the next decade for the web to really properly grow. And so I think with Bitcoin, people think that 4 years in it has improved itself, but 4 years in, it's just starting for a new technology.
Great.
Yeah. And you have to look at what problem are you trying to solve with Bitcoin? I'm not sure there's a real clear answer to that question.
There's no real rush, I think. Like, Bitcoin is not making something 1,000 times better, or is something's about to break, except, Bitcoin saves the day. So I don't think there's any time constraint on that.
Well, thank you all for joining me.
you.
Thanks.
Awesome, thanks for having us.